North Korea claims to have tested a hydrogen bomb for the first time. If confirmed, this will be the country's fourth nuclear test. The world unites to condemn the action.
Wall Street tanks as global markets get spooked by North Korea's announcement. Dalal Street falls for the third straight day and Nifty has lost over 220 points in 3 days.
Crude oil prices plunged to the lowest level in 11 years. Brent is below $35 a barrel as a crisis between Saudi Arabia and Iran means no consensus on production cuts.
In a bid to crack down on vehicular pollution, government prepones the rollout of stricter emission norms. India will leapfrog from BS4 to BS6 norms by 2020, says the Road and Transport Minister Nitin Gadkari.
The Delhi High Court comes down hard on the odd-even scheme, says the policy is causing inconvenience. Asks the state government why it cannot be restricted to 7 days as against 15 days.
There will be investors who will invest money and they should be excited with the returns what they get. But the added benefit is that they are going to change the world.
Renowned cardiologist Devi Shetty's Dalal Street operation is a big hit. His company, Narayana Hrudayalaya stock surges over 34% on the very first day of its listing.
Reduce the tax burden, ramp up public spending and revive infrastructure. India Inc. meets Finance Minister Arun Jaitley with their wish list for Budget 2016.
Thank you for putting me at ease. I've been as nervous about sitting 6 inches from you as you have been. When I was chairman of Tata's, I was always very intrigued and enthusiastic of interacting with younger people because there's the future of the country.
How many people here are entrepreneurs or want to be entrepreneurs? Entrepreneurs or want to be entrepreneurs? How many want Mr. Tata's investment? I think
then you'll need Kunal's money because
I think you're by far probably the most sought after investor in India.
He may be a corporate doyen, but in the startup universe, Ratan Tata is still taking baby steps. Tata has put his money into 6 companies, and in a freewheeling conversation with Snapdeal's Kunal Baer, Ratan Tata reveals the rationale behind those investments, also reveals that he was nervous being 6 inches away from Kunal Baer. That conversation coming up for you on the course of India Business Hour. Good evening and thanks for joining us tonight. Kritika Saxena joining us from Mumbai. Hi, Kritika.
Hi, Nandra. Lots of action lined up over the next 30 minutes, but let's kick things off with the big global story coming out of a place widely known as the Hermit Kingdom. Yes, we're talking about North Korea, which has claimed that it has successfully tested a hydrogen bomb today. North Korea's state broadcaster made that announcement describing it as the most powerful nuclear deterrent. An artificial earthquake measuring 5.1 was detected in the area. So what exactly is a hydrogen bomb and why is it more dangerous than a nuclear bomb? Bit of a physics lesson here. Firstly, a hydrogen bomb derives its energy through the nuclear fusion of atoms as opposed to an atom bomb, which works on the basic principle of nuclear fission. Now, in nuclear fission, an atom is split into 2 or more smaller, lighter atoms. Nuclear fusion, in contrast, occurs when 2 or more atoms fuse together, creating a larger, heavier atom. However, it requires an enormous energy level to trigger such a reaction. Generally, an atom bomb is used as that very trigger. But needless to say, this makes a hydrogen bomb a much more powerful atomic weapon than the earlier one. Now, CNBC's June Yoon has been looking at that story and she joins in now with the details. June, how has South Korea reacted to the latest provocation by its neighbor?
The reaction here is a very conservative reaction compared to North Korea's statement saying that it has staged a first test of a hydrogen bomb at 10 a.m. local Korea time. The South Korean government right now is being more conservative, saying that they will need to look into this a bit more, saying that further investigation is needed to see if this actually was a hydrogen bomb that was detonated. And they are saying there exists a possibility that it was not a hydrogen bomb, given that the magnitude of the latest explosion was at 4.8, which is less than, actually smaller than the magnitude 4.9 that the atomic bomb test of 2013 recorded. So if it were a hydrogen bomb, Korean experts are saying that even a failed hydrogen bomb would have meant a greater explosion, a greater magnitude recorded than what was actually recorded for this time around. So North Korea has previously staged 3 different tests of atomic bomb detonations. The latest was in 2013. So just last month, actually, North Korean leader Kim Jong-un had said that they have been developing a hydrogen bomb. But even at that time, experts both in South Korea and globally were very skeptical of this claim. And again, we are seeing South Korean experts and also the government saying that the possibility still exists that it was not a hydrogen bomb based on the magnitude of the explosion.
Thanks for joining us with that. So that seems to be the 4th test that has been carried out by North Korea, not going down well the world over. Many countries across the world are condemning North Korea's announcement of a nuclear test. Just yesterday, you also had Iran saying it's coming out with some new tests. The United States issued a statement saying it's going to respond appropriately to the provocations. North Korea's closest ally, China has also condemned the attack, asking the country to refrain from such acts when it only heightens tension in the region. Japan's Prime Minister Shinzo Abe, a worried man, he called the announcement a grave challenge to his country.
North Korea's nuclear test this time is a major threat to our nation's safety. This absolutely cannot be tolerated, and we strongly condemn this act. This is a clear violation of the United Nations Security Council resolution and a grave defiance of international nuclear non-proliferation moves.
And on cue, Wall Street and equities across the world have been spooked by this announcement from North Korea. So the S&P, Dow and Nasdaq all trading in the red. The S&P down by over 1%, Dow down by about 1.1%, and the Nasdaq down by about 0.8%. And Antara, it's not a very pretty picture in Europe as well.
A sea of red round the world, Kritika. So why should we expect any different in Europe? Let's bring up the frontline indices for you. The British FTSE down by 1.5%. So is the French DAX. Look at the German DAX. That's down 127 points. And you know, it's been a rocky start to the new year round the world. And today, Dalal Street, Kritika, down and out, and that's after some relative calm that we saw on Tuesday.
Absolutely. In fact, you know, we've seen a seesaw between the bulls and the bears, but clearly the bears have been ruling the streets. So today was no different with most of the indices, obviously after a rocky start to the new year and the last street. And it was all hunky-dory till the last 90 minutes when the market saw a sudden nosedive. And you can see that in the last 90 to 30 minutes, you can see that fall. So Sensex lost over 170 points towards the end of the day, moving closer to the 25,000 mark. Nifty lost over 40 points by the end of the day to end, again, the third straight session in the red. In fact, over the last 3 days alone, that index has lost over 220 points, sitting at that 77.41 mark today. Mid-caps fared slightly better, but that index also ended with fairly marginal losses. Anuj Singhal is here with the market action. Anuj, no respite for the bulls, clearly.
Well, the bears are in control of this market. Make no mistake about that. Today, that played out through the day. Every recovery was sold into. There was one attempt to go to 7,800. And in fact, just when the market hit 7,800 or the Nifty hit 7,800, we saw that late slide on the Nifty, which took it below 7750. At one point, even threatened to go to 7700. Some late recovery saw the market climb back a bit, but still it was below 7750. It was clutch of heavyweights that dragged the market lower. Mid-cap still outperformed or fell relatively less, but even there was a bit of a fall. And of course, global markets remain jittery. So as of now, there is a bit of a fear factor. Let's play up. Let's pull out some of the stocks that led the market lower. As I said, a clutch of heavyweights. ITC down 3%, ICICI Bank down 2.5%, and Tata Motors down 2.5% as well. So these were the top 3 drags as far as the Nifty is concerned. Some more Nifty losers. Maruti was down 2%, ONGC as well nearly 2%, and Axis Bank pretty close to a 52-week low was also lower in trade. So amidst all of this, metal stocks were also lower. So stocks like Vedanta, Hindalco, Tata Steel all down between 2 to 4%. The fact that the Nifty didn't fall more than what it looked like at some point at least was purely down to Reliance. That stock was up 3% and was really batting for the bulls. Apart from TCS and Cipla, both these stocks also up between 1 to 2%. But stock of the day clearly was the new listing of the day, Narayana Hrudayalaya Healthcare. Look at that listing, 35%. At IPO, people said it was expensive. Well, it even became more expensive after the 35% surge that we had in trade. And finally, on the mid-cap side, there were some gainers. So stocks like Torrent Power, SRF, Bajaj Hindustan gained in trade, but they were like small stocks. So overall trend clearly is that bears are in control of this market. The big question is, will the market take support at the previous lows or will this time we break them and go even lower?
Dalal Street down and out today. A late sell-off is what we saw. Thanks, Anuj, for joining us with that. Well, on to the commodity markets. Crude prices getting battered in trade. In fact, you have the Brent hitting its lowest level in 11 years. Both the Brent and the NYMEX tumbling in trade as we speak. NYMEX down by over 4%. It's languishing at $34.50 a barrel, whereas Brent is just about managing to hold on to the $35 mark. A whole host of reasons for this, which we'll get to in just a bit. Diplomatic tensions in the Middle East, poor economic activity in China is another factor. In fact, the Saudi foreign minister spoke exclusively to CNBC earlier in the day. And guess what? There is no sign of a truce. It all started after Saudi executed Shia clerics, triggering protests in Tehran, where the Saudi embassy came under attack. Both nations have severed all diplomatic ties. In fact, the Saudi foreign minister categorically told Iran to mind its own business. And you've seen a lot of Saudi Arabia's allies also sever ties with Iran and downgrade its diplomatic relations.
Iran should back off. They should stop being aggressive. They should stop interfering in the affairs of their neighbors. They should stop supporting terrorism. Isn't that what all of us around the world want? And I want to emphasize here that we have no enmity towards Iran. We have no enmity towards the Iranian people. We have tremendous respect for Iran's culture and Iran's history. Iran is a neighboring country, it's a fact. But we have a problem with their government. That's where the aggression is coming from. We wish the Iranian people well, and we wish that their government will behave as a government.
Strong words, harsh words coming in there from the Saudi Arabia foreign minister. Let's discuss the crude markets in more detail. We've got Eugene McCligan, senior analyst at Edition Energy, now joining us. Thanks, Eugene, for joining us here on CNBC TV 18. I don't know if you just heard what the Saudi Arabian foreign minister had to say, that, pretty much telling Iran to mind its own business, saying that we don't have a problem with Iran, but we do have a problem with the government. My first question to you is, clearly tensions are escalating in the Middle East, and that's not going to augur well for crude prices in 2016.
Well, even though we are seeing some escalating tensions due to the protesters at the Saudi embassy in Tehran last week, it still looks as if the market continues to focus on the excess supplies that we currently have in place in the global marketplace. Currently we still see about a 2 million barrel a day surplus of supply over demand, and it doesn't appear that there's going to be any real change in that figure for a while now. The Saudis are producing more than 10 million barrels a day, and they, in their December meeting with OPEC, determined they will keep their policy they started in place in December 2014 to maintain market share, so they won't be cutting production. And the Iranians, due to the lifting of sanctions against Iranian oil exports, are due to start exporting almost what they say will be 500,000 barrels a day in the coming months. So with that, it doesn't look as if the supply is going to tighten at all. So this low price environment that we've seen both Brent prices and WTI prices drop to is going to be here for the considerable future right now.
What is considerable future? Where do you think the prices are going to bottom out? You're saying one of the big reasons is also going to be supplies, and news just coming in that the US oil inventories have fallen by 5.1 million barrels. That's according to a news flash being attributed to the EIA.
Well, just a few moments ago, the United States Energy Information reported their weekly inventory figures. And one thing to take note in that report was they saw gasoline stockpiles increase by 10 million barrels and distillate stockpiles to increase by 6 million barrels. So, even though you did see a decline in crude stocks, you saw, large increases in fuel stocks, which suggests that the demand picture in the United States isn't that strong. And on top of that, you have worries about slowing demand from economic conditions that are expected to, contract in China in the coming year and slow growth rates in Europe.
Interrupt you there. I want to understand what is the trigger for today's sharp sell-off. Why today are we seeing Brent and NYMEX going back to the 11-year lows? We knew the Chinese economy is not doing well. The Middle Eastern tension is not new. The supply glut is not new. So why today this sharp sell-off?
No, I think it's a continuation of those factors you mentioned. I think that, we have, excess supplies on the market. You have, continued fears of stagnant economic growth, which will impact fuel demands in the coming half year at the least. And, the market, continues to come under pressure. I think that the next area that we're watching is the Great Recession of 2009 in WTI prices, which is just above $32. But, I think you have to keep in mind that, as the end of last year came, we did see a bit of a year-end spike in prices as it looked as if you saw some short covering by traders who wanted to book some profits, and that's kind of gone, to the wayside. And then now prices are retreating their decline that we've seen over the last couple months.
All right, Eugene, thank you so much for joining us on India Business Hour. So, obviously, the volatility there continuing, but some good news back home. The healthcare sector is definitely in vogue, at least as far as the Dalal Street is concerned. Narayana Hrudayalaya, the latest healthcare company to get listed in the primary markets, has made its Dalal Street debut and in style, listing at a 20% premium over and above its issue price of 250 rupees per share. As Anuj was pointing out, that was also considered expensive. And then it hit an intraday high of 25% before ending the day at 340 rupees per share. Again, 17% higher. CNBC TV 18's Radha Venkatesh caught up with Devi Shetty, the chairman of Narayana Hrudayalaya, earlier at one of their biggest hospitals in Bengaluru, and started by asking him about his vision for the company 5 years down the line.
We would like to be one of the largest healthcare players in this part of the world. In the process, our cost of healthcare will come down and the quality will improve. Ultimately, this industry is extremely sensitive to the numbers. As you do more operations, your results get better. As you do more operations, your cost goes down. And this is what we want to achieve.
Okay. Well, let me introduce a note of business. Since once you enter the share market, inevitably those questions come.
Yes.
As a visionary and as someone who has seen healthcare both in UK and in Calcutta and in places like Bangalore and Mumbai, which are more business-like, is charity really profitable? Is it a place, is it a concept for stock markets at all?
Charity is not scalable. Good business principles are scalable. Economy of 21st century will be driven by health sector. This is the industry today which is $7.4 trillion industry, which has the capacity to create the maximum number of jobs in this part of the world. So there is no doubt that healthcare, if it has to reach out to everyone, we have to reduce the cost, make it affordable, but not as a free treatment. Yeah. Because the richest man in this world cannot offer free treatment to everybody.
Yep. No, I take your point that, nobody expects free treatment. But, the stock market is a place where people hanker after profit. They want their money to make more money. So, should this have been a way to raise money for you at all? That is my question.
Yes.
Should you have looked at other avenues like perhaps grants and endowments? A stock market investor typically looks for profit. Will you be able to give him that?
India is short of 3 million beds. Someone has to create these 3 million beds. I don't think any government in this world can create that many beds, because simply there isn't that kind of wealth.
Absolutely.
So money has to come from somewhere. Grants, donations, endowments can be the seed money to start the activity. But for that to scale up, it has to be run like a business. And there will be investors who will invest money, and they should be excited with the returns what they get. But the added benefit is that they are going to change the world. They're going to make, they're going to save millions of lives. But one thing for sure, if we do not earn money for the money what is invested, we all are going to die. So it is as simple as that.
Well, some cheer coming in a very troubled market. But the other big story back home, the central government has stepped on the gas in its endeavour to curb vehicular pollution. In what it calls a bold and committed move, the government has decided to directly leapfrog to Bharat Stage 6 norms by 2020, giving Bharat Stage 5 norms a complete miss. CNBC TV 18's Farah Bukwala Vora reports that this has put automakers in a tough spot.
What took Europe 10 years to achieve, India wants to do in just 4 years. An interministerial meeting chaired by Road Transport and Highways Minister Nitin Gadkari and attended by the Oil, Heavy Industries and Environment Ministries has advanced the implementation of Bharat Stage 6 emission norms by a year. Indian vehicles which are now working on Bharat Stage 4 norms will have to adhere to Bharat Stage 6 norms by 2020 without going through the Bharat Stage 5 phase at all.
अभी हमारे देश में BS4 का फ्यूल चल रहा है। हमने ये तय किया कि अब BS4 से एकदम हम BS6 पे जाएंगे। और आपको पता होगा कि इसके लिए हमने पहले जो निर्णय किया था वो 2021 तक ये BS6 को हम लागू करेंगे, ऐसा हमने निर्णय किया था। पर आज हमने ये निर्णय किया है कि अब BS6 फ्यूल अक्रॉस द कंट्री ये 1/4/2020 तक हम लागू करेंगे।
India currently follows Bharat Stage 3 specifications across the country and Bharat Stage 4 in major cities. By April 2017, the government promises to supply Bharat Stage 4 compliant fuel all over the country. The government believes advancing Bharat Stage 6 emission norms to 2020 will mean far less pollution, because while Bharat Stage 4 fuels contain 50 parts per million sulfur, BS6 grade fuel will have 10 parts per million sulfur, which will bring down toxic emission levels. But this has put car manufacturers in a fix. Several automakers CNBC TV 18 spoke to said while Bharat Stage 6 compliant technology is available in Europe, it has to be adapted to Indian driving circumstances. Secondly, development cycles of new technology in India takes around 4 years. So leapfrogging to Bharat Stage 6 norms by 2020 would put severe pressure on satisfactory testing and validation of new technology, which may lead to safety compromises. Further, it will require substantial investment in new technology, which would require OEMs to hike prices. With costlier cars and more expensive Bharat Stage 6 compliant fuel, OEMs are afraid demand may take a hit.
It is industry's request that we should have the BS4 available to start with all India, which currently is available only in 38 cities. So that's what is our plea. Going forward, surely any new technologies has its own time. It's not only that the technology available elsewhere in the world can be straight brought in and put onto the products. It requires various development cycles. It requires requisite fuel.
Northern Indian cities where you have a lot of pollution coming from dust in the deserts of Rajasthan, combined with biomass burning in the poorer jaggies and slums. The auto also had its own load, and therefore they are attacking one. But what is missing? A holistic management approach to pollution.
It's not just auto companies that are in a bind. Oil refineries will have to change processes to meet stricter fuel standards, and this will require an investment of at least 30,000 crore rupees. And that's not easy money, since it means going back to the drawing board and scrapping or altering existing plans. In Mumbai, Farah Bukwala Vora.
there you go, the government deciding to advance and leapfrog to BS6 by 2020. Auto companies already complained that BS4 is not available pan-India, and all companies are now going to have to invest 28,000 crore rupees. And Pawan Goenka of M&M, who spoke to us a few days back, had warned that unrealistic timelines when it came to adhering to emission norms would actually end up being counterproductive.
It's very easy for NGOs to talk about a date. I think the dates have to be looked at with technical feasibility. And it's not what Mahindra says or Toyota says or any auto company says. I think the government of India has access to experts in the field. And they're talking. I mean, I'm very happy with the way systematically the regulators are trying to understand what it takes to bring in a BS5 fuel, a BS6 fuel, what it takes to bring in a BS5 vehicle, BS6 vehicle, and make a very aggressive timeline, but a timeline that is not unrealistic. Right? Now, if your NGOs want an unrealistic timeline saying bring BS5 next year, then we shut down the industry.
And while we're talking about emissions and the fight against pollution, the Chief Justice of India is following the odd-even rule. But the Delhi High Court seems to be of a different view. Some harsh words came in for that scheme. Ashmit Kumar, who was tracking that case, now joins us. You know, so Ashmit, you have the High Court asking the Delhi government, why is it that this scheme cannot be restricted for just 7 days as opposed to 15 days that are being talked about right now? What does the Delhi government have to say in response?
Well, the Delhi government was of course answering to various questions that were raised by the Delhi High Court. The Delhi High Court, mind you, was hearing nearly a dozen PILs questioning the odd-even formula, either in its entirety or certain portions of it. But clearly, at this point, the Delhi government's arguments not managing to cut any ice. Quite visibly, the Delhi High Court is at odds with the even-odd formula, questioning the Delhi government as to why the odd-even formula cannot be wrapped up within just 7 days as opposed to the earlier plan of a 15-day trial run. Now, essentially what the Delhi High Court put forth to the Delhi government was that a 7-day period, as per the Delhi High Court, is sufficient to collect enough empirical data to clarify on the efficacy of the odd-even formula. The Delhi High Court also observed that prima facie it appears the public transport system is not geared for the additional load. It also, in fact, cited the grave inconvenience caused apparently to the citizens. That, of course, was an observation from the Delhi High Court. And finally, the Delhi High Court observing that the time for rhetoric is done and that now is the need for hard numbers to crunch those numbers to declare, to establish the efficacy of the odd-even formula, and that the onus to do so lies squarely on the shoulders of the Delhi government. Now, what's interesting here is that despite all of these noises coming from the Delhi High Court, the statement, the expression of intent from the Apex Court is quite clear, though not a part of a formal order, but through various oral observations. The Apex Court judge, the Chief Justice, has in fact backed the Delhi government for taking these dramatic measures. In fact, was also first off the cuff in terms of also leading from the front in terms of carpooling with fellow judges to drive to the Apex Court. So that, of course, is an expression of intent. The Delhi High Court, however, taking exception to the odd-even formula, granting time a 2-day window to the Delhi government to clarify, and on Jan 8, the Delhi High Court will take a call on whether or not it's time for curtains as far as the odd-even formula is concerned.
And we have all kinds of environmental agencies also at loggerheads. The Chief Minister insisting pollution has come down, but you have other agencies saying no, that is not the case. There's been no impact in pollution. So clearly, I think we can expect fireworks on the 8th. Thanks a lot, Ashwin, for joining us. With that, so that's the latest as far as Delhi's tryst with the odd-even scheme goes. Kritika, I can tell you that our roads are slightly better. We had more traffic today than yesterday. You guys in Mumbai should try out something. It's a very messy city, is all I have to say.
You know, the policymakers shouldn't hear that. Let's not have that happen. The smog still continues. So at least let's hope that things do get clearer on the 8th of January. But meanwhile, the National Green Tribunal today pulled up emissions scandal embroiled German automaker Volkswagen over its cheat devices. The NGT has asked it to submit an undertaking by the 11th of January that it will not sell any vehicles in India that are fitted with that device. Remember, on the 14th of December 2015, the tribunal had sought a response from the central government and Volkswagen on a plea by Delhi residents seeking a ban on sale of its vehicles for alleged violation of emission norms. The case will now be heard on the 5th of February. But Nayantara, it's really all about budget discussions now in the next couple of weeks.
That's right, whether the budget is going to happen on 28th of February or 29th of February, which incidentally is a Monday. We do know that North Block, there is a quarantine on until the Finance Minister Arun Jaitley with his team met with industry chambers. Industry chambers should not come as a surprise. The top of the list is to cut down taxes to reduce the direct tax burden. That should really not be a surprise. And the second one is to promote public investments. Here are the highlights of what the industry chambers have sought from Budget 2016.
Finance Minister Arun Jaitley's third budget under Modi government will be his most challenging. His own finance advisor has tapered down the growth rate. And with the pace of investment yet to show any traction, Jaitley has his work cut out for him. No surprise then that the recommendations made by industry chambers, CII, FICCI and ASSOCHAM, along with export lobby FIO, takes into account the possibility of a weaker demand and offer possible solutions to get the growth momentum going. CII budget recommendations include jump-starting rural demand by higher allocations to Pradhan Mantri Gram Sadak Yojana and Pradhan Mantri Krishi Sinchai Yojana, and enhanced investments in railways, irrigation and power. CII has warned that fiscal math should not be compromised. But its counterpart FICCI wants a recalibration of the fiscal deficit roadmap to promote public investment.
We do see that the efforts that have come in by the way of various policies of the government over the last 18 months, hopefully they will start seeing some results on the ground. We are hopeful that 2016 would see private sector investments coming back in.
The average tax rate a lot of corporates are now paying is about 23.5%. So we said instead of 25%, we requested the finance minister, if possible, to look at 22%.
Industry body ASSOCHAM has called for boosting infra investment through support for IIFCL to rebuild capacity of private infrastructure companies. The replacement of costly bank guarantees by bid bonds, and that the government do away with the surcharge on corporate tax and service tax.
Infrastructure is what has to be the key driver. The private sector investment in infra has gone away, and that needs to be brought back. The legacy issues have to be addressed, the NPLs and all which are there.
Industry body NASSCOM sought parity between domestic and foreign investors in startups.
Allowing reinvestment of such investment without being liable for taxation, as long as it is reinvested. Similarly, we have also said that there must be complete parity between domestic investors and non-resident investors. Today, domestic investors are taxed more at a higher rate than the non-resident investors. And this is certainly an anomaly which has to be addressed.
Essentially, the industry bodies has asked that the onus of getting the investment mojo back rests with the government. But for Finance Minister, the big challenge will be sticking to its fiscal target for FY16 and powering up the growth cycle. Bureau Report.